Hello, everyone. Oh, I'm very thankful for the feedback. I never knew that the audio isn't on. Okay, I do hope we can all hear me right now. I had to sort out some little bit of technical issues behind the scenes here. So if you can hear me, please let me know in the comment section. So that means I would have to recap all I've said so far. So I will just quickly do a summary of what I said. So, like I said, today it's a very important day, especially as it served as a double for the last trading day for the week. And of course, it's also going to be the last trading day for the month. And considering the fact that today is the last trading day of the month and of the week, there is a high tendency for us to witness some high level of volatility today due to major key players in the market rounding off their trading activities ahead of the new month. So we'll be seeing big hedge fund managers, central banks, and major key players in the market trying to round up their trading activity. And this could come in the form of profit taking activities. As you all know, the new month usually starts on a different tone from the previous month, and we may see market trying to take some profit off the chart, and this could lead into price action moving in the opposite direction of the prior leading price action. And of course, I said that we are going to be taking all of this into consideration while we review the current market structure. And I have a very strong feeling that we will be seeing some volatility, strong volatility in the market today. And considering the fact that we are also looking forward to another major US macroeconomic data in the form of the US core PCE, which is considered to be the favorite inflationary gauge for the Federal Reserve. And of course, whatever comes out today will be giving us an idea into what the Fed the monetary policy of the Fed is going to be looking like in the nearest future. And of course, this is coming on the backdrop of hawkish remarks and opinions from Federal Reserve officials in the last couple of weeks, despite um, the the CPI data coming in lower than expected, and of course the not too impressive economic data coming in from the United States in the last couple of weeks. So it's going to be a very big day for us. And as usual, we are going to be strategically positioning ourselves so that we can capitalize on that big move when it finally happens. Now, this week so far, we've had some um, interesting situations across the asset we are looking at. Remember, we have been focusing on three financial instruments, which includes the USOILSPOT, the GBPUSD, and of course, my favorite amongst them, which is the XAUUSD, popularly known as the gold spot. And we did pretty well during the first half of the week, and not until yesterday we begin to see some choppy market condition, which doesn't come to me as a surprise at all, considering the fact that the asset we are looking at are US dollar denominated assets, and of course the core PCE is a very important event, and majority do not want to be taking risky directional bets at the moment, waiting or stepping aside to wait for this data to come in before making any decisions. And of course, we've seen the market gripped with consolidation phase, indecision phase in the last 24 to 36 hours. So we are going to be unraveling this and see how we can use the structures we have on the chart to strategically position ourselves for the next move. And I also went further to welcome newcomers in the house, that is those who are joining us for the first time, who really do not know what is the Forex Morning Mastery is all about. Now, the Forex Morning Mastery is a platform where we come together 3 times in a week: Mondays, Wednesdays, and Friday. We come together as a community to engage in follow-ups and reviews of our current positions, which are positions that I published during the course of the weekend, giving us an insight into what my thought process are ahead of every new week. And during the course of this session, we go further to equip ourselves with knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand my analytical approach, which eventually will help in enhancing your own trading decisions and strategies. And it's also important for us to understand that this platform is not a signal service platform, but instead a community where we all come together to have a deeper understanding into the current market dynamics and using that information to strategically position ourselves for the next move, irrespective of whatever type of trader you are, be it scalper, day trading, swing trading, or even positional trading. So once again, I do welcome you on board and encourage you to actively engage in the comment section. And if you have any question whatsoever as regards to the financial market matters, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So thank you very much, guys, for the feedbacks from Dre995 to Odueno, my namesake Sheriff Abdul Kadiri. Thank you, Gary, for the confirmation. I'm very glad that we are back on live. So thank you. All right. So with that being said here, we shall be diving right into the business. And for those of you who have been with me for a while, you know how we do it. The first thing we normally do is to keep tabs with the fundamental factors that is likely going to be influencing the sentiment in the market today. And of course, by looking at the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we are looking at for this week, we have been focusing on high impactful economic features from both the United States and the United Kingdom economic dockets. However, so far this week, we really do not have any major impactful event from the United Kingdom, and in fact from the United States we had reduced impactful event compared to what we usually see on the economic calendar. However, we had some mid-tier economic features like a bunch of Federal Reserve official speeches throughout the course of the week, which obviously everyone is holding on to the narrative that interest rate may be kept higher for an extended period of time, as they would like to adopt a wait-and-see approach, looking for more data to really show that inflationary pressure in the United States is finally thinning out. Now, this is why the core personal consumption expenditure data coming up today is on everyone's radar. It's a very, very important event we are going to be looking forward to today. Now, for those of us who really do not know what the core PCE is all about and how important this data is in and how instrumental it is in helping majority of market participants to make decisions, well, this data here is an index that measures the average change over time in prices paid by consumers for goods and services. So most importantly, especially within the last 30 months, is what the data usually gives us. And the anticipation of this data usually influences the market sentiment significantly, as it provides insight into the inflationary pressure in the United States. And a majority have considered this data to be the favorite to measure inflation by the Federal Reserve. And of course, we understand that if inflation is high, there is going to be a higher chance that interest rate will be kept higher for an extended period of time, so as to curtail the high prices in the market. But if inflation drops, then there is a high chance that interest rate will be reduced or cut anytime soon. So this is what this is all about. And if inflation is high, interest rate is kept higher, and if interest is kept higher, then the value of the currency of that economy continues to grow. And if inflation drops, interest rate will be cut, and the value of the currency for that economy will drop significantly. So I hope we all understand the dynamics behind this rhetoric. Now, yesterday we had the gross domestic product annualized for quarter 1 from the United States. For those who don't know, this is an indicator representing the annualized percentage change in a country's economic performance, and of course it represents the total value of all goods and services produced within that economy. Now, it tells us if the economy is growing or contracting. Now, from the data we saw here yesterday, we saw that the United States economy contracted a little bit. If we consider the previous data for the previous quarter, it was at 1.6%, and as we saw, the actual data came in at 1.3%, just as the way the market had expected. Now, for me, this is a sign that the monetary policy that the United States has adopted in the last 1 year is gradually making an impact on the economy. Now, the core personal consumption expenditure will be the icing on the cake that will help us know if truly inflation, if the economy is winding down a little bit, so that things will come back to normal. So this is the impactful event we are looking forward to today, and the timing of this event is in about 3 hours from now. So it's very, very important for us to mark out the timing of this event so that we can be around to strategically position ourselves for the anticipation and of course the reaction to this event. So this is what we're looking out for today. So let us mark out the timing as always, and with that being said, let's dive right into the business, as we want to be looking at things from a technical standpoint. So with that being said, here we shall be starting with the usual asset we normally take, which is the USOILSPOT, considered to be the US crude oil market. Now, so far this week, we've done pretty well on this asset. During the first half of the week, we saw the market doing a bullish momentum, and of course, we did capitalize on that opportunity and of maximizing the potential of that bullish move by executing multiple entries on this particular asset. And during the second half of the week, we begin to see bearish momentum, and we were lucky enough to capitalize on that one. Though we only had one position, I was very skeptical as regards to taking more position on the sell move, and I did mention this in my commentary that I will not be taking adding any position to that sell entry, as we want to look to how far that momentum will go before another wave of bullish momentum will happen. Now, for those of us who are joining us for the first time and do not understand what really guided our decisions as regards to buying and selling this asset, let's quickly take a recap of what really happened. Now, I think my face is not really showing there, right? Okay, I think, is this better? I think it's better like this. Okay, so I think it's better like this. So before I go further into this, at the beginning of the week, we had a top-down analysis on this asset. So I wouldn't be going into the top-down analysis. Remember, during the Forex Morning Mastery, we only focus on the execution time frame, which is the 1 hour time frame. Now, if you really want to have an insight or background knowledge into how we got to the point we had today, you can check the link right in the description box of this current video. I have a link there that will refer you to that video on Monday. So let's go right into the business. So at the beginning of the week, we had a simple trading setup after considering this range bound structure, after citing price action confined within our key level for the week at the $78 area, and the support line here had the $77.70 level. Now, for a quick reminder on how we use our key levels in this community, when price action trades above the key level, we look out for patterns and structures that support the idea of buying. And when price drops below the key level, we look out for patterns and structures that support the idea of selling. Now, with a range-bound structure here, whenever we identify this range-bound structure, we usually wait for market participants to finally make a directional decision, which will either come in the form of a breakdown of the support line, giving us an opportunity to sell, or the breakout of the resistance line, which doubles with the key level at the $78 area to join an uptrend move. And lo and behold, at the beginning of the week, we had the privilege of capturing that bullish momentum as we bought the breakout of both the key level and the resistance line of that range at the $78 area. And remember, we added multiple entries to this position by adding at the $78.40 level. We also added one more at the $78.70 area, and of course added the final one at the $78.90 area as we rode that bullish momentum all the way into the $80.50 level. So it was a very profitable first half of the week. In fact, if you had only taken one position, that is the first breakout, we had over 250 pips move, let alone the other multiple entries. So we are running into about 6 to 700 pips profit as at the first half of the week. Now, during our live session on Wednesday, we begin to notice a new development in this particular market. As we saw here on Wednesday, our price action was consolidating within the $80.25 area and of course the $80 level, giving us a new trading setup ahead of the second half of the week. And one of the things we talked about here on Wednesday is that we will be looking out for buying opportunity at the breakout of the $80.25 level, and the only reason for us to sell the USOILSPOT was for price to break down the support line. Now, during our Wednesday's trading session, we already had this buy position triggered, and I can remember mentioning that we should all move our stop losses, securing this position because anything could happen. And one of the reasons why I said this was due to the expected volatility as a result of the anticipation of both the API and EIA crude stockpile report for last week, which usually has this tendency of influencing the sentiment in the market. And of course, we saw what happened. A bearish momentum came in, took us out of all the buy position, and of course triggered our sell stop order below the $80 area to incite that strong bearish momentum to the downside. And in fact, in the last 60 to 96 hours, we've seen 72 hours, we've seen price action consistently found lower lows and lower highs in that regard. So I only had one position, like I said, because of the way the market is. I had a strong feeling that the momentum is still bullish, and selling at this juncture may be very, very risky. So I only took one position, and we had over 220 pips move as regards to that bearish move. And for those of us who still have the sell position active, it is high time you want to be moving your stop losses and secure this current profit, as anything could happen as market participants round off their trading activities for the month of May. Now, if you would ask me, I will be suggesting that anywhere around the $78 area seems most appropriate to move all stop losses to while we secure the current market condition, and of course, monitor price action to see how we will be strategically joining the next move from this particular area. Now, with a well secured position, what is going to be our next line of action today? How are we going to continue joining the bearish momentum to the downside, or are there chances that buyers may come in at any time soon? Now, from a technical standpoint, if you look at the structure closely, for those of you who are familiar with the structure we identified on the 4 hours time frame on Monday, remember that we had this beautiful descending trend line marked out on the 4 hours time frame. Now, for the sake of clarity, let me go through the 4 hours time frame so we can see things together and have a better understanding into what is going on here. So if you remember vividly, on Monday we were able to acknowledge a descending channel after connecting the series of higher highs and higher lows since the month of March. So we had the support line of this descending channel, remember, and then we had the resistant line of that descending channel after connecting the series of lower highs. And one thing I told you on Monday was that I'm beginning to sense that sellers are losing the momentum after considering the touches on the support line of that descending channel. Now, if you look at this one, we had a touch here. We look fast forward to the mid-month of April, we also had another touch here, and fast forward to the beginning of the month of May, we saw another touch around this area. And ever since that touch happened, you will see that price never came back into that support line, as we saw how that area between the $77 level and the $76.15 area begin to serve as a barrier for sellers, as every attempt by sellers to break through that structure was met with strong resistance from the buyers. And with this robust demand platform around this area, I was of the opinion that we may likely be seeing price action break out the resistant line of that descending channel for the first time in about 2 to 3 months, and that was exactly what happened. Now, with the situation we had here and using the key level at the $78 area as a yardstick to guide trading activities for this month, we were fortunate enough to capitalize on the breakout of the resistant line of that descending channel. Now, if we zoom into this current structure, look at what is going on here. Whenever from a theoretical standpoint, whenever price action breaks out of a very important structure like this, we expect that some point in time, price is likely going to come back to retest the structure in an attempt to continue the uptrend move. Now, if you look at what has happened here in the last 24 hours, you will see that price action is right back into the resistant line of that descending channel, and as soon as price got into that structure, we begin to see how it has become difficult for sellers to continue the decline. And what have we seen here in the last 24 hours? Buy pressure has gradually emerged from this particular area. Now the question is, will this momentum continue to the upside, or will it break down and come back within the descending channel to incite continued selling pressure? Now, I needed to show you this so that we can all have the same perspective when we look at things on the 1 hour time frame. So right here on the 1 hour time frame, one thing you would observe here is that price action is back into the range we identified at the beginning of the week, where that $77.70 area was serving as a strong demand zone. Remember, this was the platform that drove the bullish momentum we capitalized on Monday, and right now price action is back into that structure, and we have seen continued buy pressure within that area in the last 24 hours. So for me at this point, the path of least resistance is looking bullish. And what are the conditions that will make us continue the uptrend move? Well, I already have a buy stop order sitting above the $78 area, where I have the intention of joining that uptrend move after price action attested that descending trend line, which is also serving as the resistant line of that descending channel we identified on the daily, on the 4 hours time frame. So I think price will continue to the upside from this particular area, and there are some other factors behind the scenes which further buttresses this idea. Now, for those of us who are with me on my Telegram platform, you definitely must have gotten an insight into this. Now, the EIA stockpile reports that came out on Thursday indicated that US crude oil inventory declined by a whopping 4.1 million barrels for the week ended on May 24th. And this data here exceeded the market expectation, which was projecting a 1.9 million barrel deficit. So you can see the variance there, which is quite impressive. Now, what does this simply means when there is a depletion in the crude oil stockpile? Now, when there is a depletion in the crude stockpile, so it's like the US have a reserve, a stockpile where they once they produce oil, they keep this oil for future purposes. Now, if the stockpile does not grow in a particular week, it simply means that the demand in the market was so much that they were not able to save from what they produced in the previous week. So what this simply means is that the supply in the market for the previous week was not enough to cater for the demand. Now, when this happens, when supply reduces and demand increases, our simple economics tells us that the higher the demand, the higher the prices. So price will definitely rise when there is a high demand, especially when supply has dropped significantly. Now, this is what this crude oil stockpile report is telling us. Now, if we look at it on the chart, you would agree that everything is looking bullish at this point. There is high demand in the market, supply has reduced, and let's see if the market is going to react according to theoretical expectations. Then another factor behind the scenes that could likely influence an ascent in oil prices is the upcoming OPEC Plus meeting, which is scheduled for June 2nd. That's on Sunday. So the OPEC Plus members will be having a virtual meeting, and inside reports are saying that OPEC Plus is considering to maintain the oil cut in production at 2.2 million barrels for last quarter. They're trying to extend it into the next quarter. So what does that mean? They're trying to artificially skyrocket the prices of oil. So for me, the path of least resistance is still looking bullish. And if we also consider the geopolitical tensions in the Middle East, which could heighten concerns as regards to oil disruption from that region, everything is looking bullish for me at this particular point in time. So in that regard, we are going to be looking out for buying opportunities above the $78 area to capitalize on this uptrend move. And in fact, if price continues to climb and find new highs, I will be using these multiple levels that we used on Monday to join the bullish momentum. So we have the $78.40 area, we have the $78.90 area, and of course we have the $79.30 level. Of course, I doubt if price will ever get to this point today, but if it does, we want to be on standby to capitalize on this move. And of course, we have the $80 mark. So let's mark out these levels on our chart. We shall be positioning ourselves strategically to join this uptrend move as price continues to climb and find new highs. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community, we also want to keep tabs with the opposite direction as well. The financial market is an uncertain environment, and anything could actually happen. We do not know what will happen today before the end of today, and considering the fact that today is the last trading day of the month, we could get some surprises. So we want to keep our options as open as possible. Hence, we want to be analyzing the potentials of sellers as well. Now, what are the conditions that will make us sell the US OILSPOT today if the market presents that opportunity? Well, for me to join a bearish opportunity from this particular structure, I would like to see price action break down the lowest point for this week. This was exactly where price action started this week. That is the $77.70 level. However, the fact that even though a breakdown of the $77.70 level will be above this descending trend line, which doubles as the resistant line of that descending channel we saw on the 4 hours time frame, I would like to see some significant confirmation before I join a bearish move. In fact, I would love to see price drop below this descending trend line for me to feel comfortable selling, or a breakdown retest of the $77.70 level characterized by enough selling pressure to join that decline to the downside. So let's see how the market is going to play out around this area. Trust me, I will be with you in the comment section to give you an update. Comment section of my trading Telegram platform to give you an update as at when due. I have a strong feeling it's going to the upside, but if the opposite happens, we are always going to be on standby to capitalize on that move. So this is my simple view on the US OILSPOT for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. Use that time as well to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. And do not forget to click on the like button if you have found this content helpful and useful in making your independent trading decisions for today. I would really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and of course it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial to them too. And thank you very much as you do so. So see you in about 10 to 15 seconds from now. Stay tuned in. All right. So, in the absence of no questions, I want to assume that we are all on the same page. So, with that being said, let's move on to the next asset on our watch list. Stay tuned in. So, the next asset we are going to be looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And in fact, this week so far, we've had some interesting positions on this particular asset. Yesterday, we had a buy position triggered. I think we had two buy position triggered yesterday. The first one did very well, moved about, how many pips was that? It moved about 26 25 pips before the bearish momentum came in, and of course we had the second buy position triggered, which obviously not do very well at all, as we got as that one went to eat our stop losses. And the recent decline in the pound sterling in the last 24 hours could be attributed to the market's mixed reaction in the market as regards to the upcoming US core PCE data. So I think majority in the market are not willing to take aggressive bets at this point in time, as they will need to wait for this event, for this data to come in, after which they can now use it to decide if they are going to be buying or selling. So I think this is why we've seen this traction decline in the last 24 hours. However, since the beginning of the week, we've done pretty well. I think we did scoop some profits during the course of the week, and for the sake of those who missed out on our earlier sessions, let's quickly run through that, as I have a different chart entirely to project what really happened at the beginning of the week. So we had the privilege of joining the bullish momentum before the bearish momentum began during the second half of the week. So let's look at this together and let's have a deep insight into what is really going on in this market. Now remember how I'm not going to be taking the top-down analysis. I already done this. If you missed out on that top-down analysis, you can check the video, the link to the video right in the description box of this current video you are watching. So at the beginning of the week, the momentum was bullish. The week started on a positive note for the pound sterling, and of course we had this old situation where price started at around the 1.27290 area, culminated a little bit around the 1.2777440 area, where we saw our first resistant line for the week. And in fact, for the first 10 to 12 hours, price action traded within this range. And you know how we treat our range bound structure. We wait for either the breakdown, which obviously never happened, to give us selling opportunity, or the breakout of the resistant line to give us an opportunity to buy. And of course, we had the privilege of capturing that first buy position for the week, had the breakout. In fact, if you missed out on that opportunity, the market was kind enough coming back to retest the structure, and since then price action continued to find higher highs. We also marked out multiple levels like the 1.276 and of course the 1.278 and finally the 1.27950 area to maximize the potential of this bullish move. So we had the first three positions did very well, except for the last one, which was taken out at stop losses. So the first half of the week was pretty well for us all in this community, and on Tuesday we said we will be maintaining the bullish bias as long as price action remains above this ascending trend line. And one of the things we agreed here is that if the ascending trend line is breached and broken to the downside, this could trigger selling opportunities. And look at what we have here during Tuesday's trading session. We had the 1.278 sharing a beautiful confluence with that ascending trend line. And of course, we saw how the barrier around the 1.2795 was so strong that the buyers couldn't break out of the structure, leading to the breakdown retest of both the ascending trend line and the 1.278 to trigger our selling opportunities. And of course, we were able to ride that momentum all the way to the downside. And of course, we had in some couple of more sell positions along the way as we rode that momentum to the downside. Now, it was yesterday we had this new trading setup, which I did share with you on my social media platform, that we said we will be using to capitalize on the uptrend after highlighting that descending trend line since the beginning of the week. So we saw price breakout of that descending trend line, and just like the structure we identified on the US oil market, we have the same thing replicating on the GBPUSD. Now, first of all, let's talk about the momentum in this asset, the primary momentum in this market, which is bullish. Remember, we have this ascending trend line. Let me zoom out so we can see things clearly. So we have an ascending trend line after connecting the series of higher lows in the last 4 to 5 weeks. As you will see, the momentum has been consistent and uniform to the upside. And after price broke out of that, let me zoom in so we can see things clearly here. So after price broke out of this descending trend line here yesterday, which we of course capitalized on, we saw bearish momentum resume again. And from a technical standpoint, when price breaks out of a significant structure like this, we expect that price action will come back to retest it. And look at how beautifully the descending trend line and of course the ascending trend line share a confluence. Now, this is a critical juncture in this market where, depending on how market participant react to this confluence, will determine if we are going to be buying or selling. And if you saw my commentary this morning on my TradingView and Telegram platform, I did mention that we will be looking out for a reversal setup at this confluence to join an uptrend move. So for the sake of clarity, we shall be looking at anything in the form of double bottom structures, head and shoulder patterns, or a falling wedge where we mark out the neckline of this pattern. And of course, if price breaks out of the neckline, then we have a sweet confirmation to continue that uptrend move. So to give a visual representation of what I'm talking about, let's take a double bottom, for instance, in this case scenario. So if we have price do this kind of thing around this area, well, we'll mark out the neckline of the double bottom structure. And of course, if price breaks out, retest the double bottoms, the neckline of a double bottom structure, then we are good to continue the uptrend move. This could take about 3 to 4 hours before it happens, or even prior to the US core PCE. So personally, pending the time that this old structure will form, I already have a buy stop order sitting above the 1.272. So I'm giving enough breathing space for price action to move around to capture that that reversal setup we are looking for. So a huge stop loss of about 25 pips will do at this particular point in time. And of course, we look out for more opportunities to buy if price action goes ahead to break out of the 1.27450. And at that point, we know that we are in a strong bullish momentum. So this is what I'm looking at to capitalize on an uptrend move around this area. So a reversal setup or a breakout retest of the 1.272 will be enough for us to join an uptrend continuation. However, if price does the opposite and maybe the core PCE comes in higher than expected, giving the US dollar a platform to thrive on, and then the chances that the ascending trend line will be breached and broken to the downside will increase. And look at how the ascending trend line here shares a beautiful confluence with that psychological key level. Remember, for those of you who saw my video, my weekend video on the GBPUSD, the 1.2700 area is our key level for this week, and you know how we use our key levels. When price drops below the key level, we look out for patterns and structures that supports the idea of selling, and if price climbs above the key level, we look out for patterns and structures that supports the idea of buying the asset. So look at how beautifully it shares a confluence with our ascending trend line. So for me, a breakdown retest of that key level would be a beautiful opportunity to join the sell move. At that point, price action has breached the ascending trend line, and it will be a signal that the ascending trend line may no longer have the capacity to continue to negate the bearish attempt. Remember, this ascending trend line has been holding this bullish momentum in the last 4 to 5 weeks, and if a breakdown happens, this will be the first time price will be breaking down that structure, and that will be a good signal to join a bearish move. Now, if price goes on to break down the lowest point for this week at the 1.26850, we will be adding more sell positions to our existing trade. So that is how we are going to be capitalizing on selling opportunities in this particular market. So you can see how crucial this area is, that is between the 1.272 and the 1.27 area. So it's important that we mark out these levels on our chart, as it's going to be playing a major role in guiding our independent trading decisions. And trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give us update as at when due. And please note, as regards to the US core PCE, if the data comes in as expected, it is unlikely to prompt the Fed towards rate cuts, as policymakers have indicated that they want to see a sustained decline in inflation before considering policy normalization. So a hotter than expected inflation reading will delay market speculations about interest rate cuts until maybe November. So let's see how the market will play out as we gradually get close to the US core PCE later today. So this is my simple view on the GBPUSD. I encourage us all to mark out these levels on our chart, as they will be playing a significant role in guiding our trading decisions for today. And if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off. Let's see if there are any questions whatsoever before we move on to the final assets on our watch list for today. Stay tuned in, guys, and don't forget to click on the like button if you have found this content helpful and useful. Let's make the number of likes tally with the number of people on board at least, and thank you very much as you do so. See you soon. Okay, so in the absence of no questions, I guess we are all on the same page, and all I've said is quite explanatory. And okay, I see a comment here from Michael Mulwar. Michael, good morning to you. Glad to have you around with us this morning. And I guess you're new with us. This is my first time seeing you in the comment section. So you have a question for us. You said, how do you avoid fake outs when structure is broken to the upside or downside? Well, that's a very beautiful question. Well, I've talked about this several times in this community. Now, for you to make money in the financial market, you must be willing and ready to lose money. So you have to lose money to make money. Now, this is the approach we have adopted in this community to navigate such sensitive situations whenever they evolve in the market. So now, for instance, there are two ways through which we can capitalize on trading opportunities at levels we identified on the chart. Now, let me take, for instance, the 1.272 level just for the case scenario of this explanation. So we have the 1.272, and let's say we are looking forward to buying the breakout of the 1.272. So like I said, there are two ways through which you can capitalize on this one. Now, the first one is for those of us who are part of this profitable journey since the beginning of the week. So if you have been part of the profitable journey, you've been making money on the GBPUSD so far this week, you can afford to leverage on the profit you had made so far this week to test waters around that particular area. So placing a buy stop order above that area makes a lot of sense. So we know that, okay, fine, if we have made some profit, so if price breaks out of that structure and it goes on fine, good, all well and good. But if it doesn't, we know that we are only risking some of the profit we have made for the week. However, if you are new with us and you are yet to take on any positions on the GBPUSD, so that means you do not have any leverage to bank on. So what you are going to be doing is to exercise patience and wait for confirmations to happen before you jump into that position. So what do I mean by confirmations? You look out for the breakout of the structure to happen, then you scale down into your lower time frame, let's say the 5 or 10 or 15 minutes time frame, to look out for retest of structure, which is characterized by buying pressure, where we see the inability of sellers to continue below the 1.272. Then we can actually join that uptrend move. So this is how we navigate such structure in this community. So I do hope I made myself clear there, Michael. But if you still have any questions, feel free to let me know in the comment section. So I hope that was clear. All right, so let's move on to the next asset on our watch list. But before we do, I would like to take about all right, you are very much welcome, Michael. I'm glad that you found that useful. So I would like to take about 2 minutes, a minute or two, to quickly sort out a personal thing behind the scenes, and I'll be back again in about 2 minutes from now. So please stay tuned in and please bear with me in that regard. So I will be right back in 2 minutes. Thank you very much. All right, here I'm back. Thank you for bearing with me. Let's move on to finalize today's session. So we are moving into the final assets on our watch list for today. Stay tuned in. So the final asset we are looking at this morning is my favorite asset amongst them all, of course, and that is the XAUUSD, popularly known as the gold spot. And in fact, we have a little bit of complicated situation here on this particular asset, as you will see that in the last 12 to 18 hours thereabout, the market has been a little bit choppy, which further emphasize the prevailing uncertainty in this market. However, before today, we've done pretty well on this particular asset. Let's quickly run through, for the sake of those who are joining us for the first time, let's run through what really happened at the beginning of the week and what led to the decisions we made until this particular moment. And I do have a different chart for the first half of the week, so let's look at that quickly. So at the beginning of the week, now before I go further, for those of you who had missed out on my top-down analysis on this asset, I would encourage you to for educational purposes to watch my weekend video on the XAUUSD, where I did a top-down analysis and of course went further to explain how we are going to be using this levels on the charts to guide our decision making for the week. So with that said, let's look at the structure. So at the beginning of the week, we had a situation where price action started at around the $2,332 area, and in fact we had a range bound structure for the first 4 to 5 hours of the week. The range was not that long. It didn't take long a time for it to form, so we had between the $2,340.50 level and a $2,332.50 area. It was a $8 range, and which emphasized the prevailing uncertainty in the market at that particular point in time. And of course, you know how we treat our range bound structures in this community. Whenever we identify them, we wait patiently for the market to finally make a directional decision, which usually comes either in the form of a breakdown of the support line, which obviously never happened, to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. Now, we saw what happened on Monday morning. Price broke out the structure. In fact, if you missed out on that opportunity, the market was kind enough, came back to retest structure, and lo and behold, we saw price climb to the upside, and we were privileged to double the setup on Monday and Tuesday's trading session. So what I mean by that is, on Monday's session we bought the breakout of the $2,340.50 level. We also added one more position at the breakout of our key level at the 2,350. Now, price moved up a little bit and we saw selling pressure come in, so we moved our stop losses accordingly, and we got taken out with about 100 to 120 pips on that first buy setup at the beginning of the week. Then on Tuesday, we saw price come back into the structure, which triggered another buy order at the $2,340, $50.50. We added another buy position at the breakout of the 2,350. We added another one at the breakout of the 2,360. The first two positions did very well, while the third one did not do very well. We were able to record another profit on that one. I hope you can still hear me clearly. Please let me know in the comment section. It's raining heavily in this part of the world right now, so If you cannot hear me clearly, let me know in the comment section so I can increase the volume of my microphone. So we were able to join those two opportunities at the beginning of the week, which did very well for us. And during the second half of the week, following the hawkish remark from the Federal Reserve officials on Tuesday, Monday, Tuesdays, and Wednesday, which incited a positive traction in favor of the US dollar, we were privileged to capitalize on the bearish momentum at the breakdown of the 2,350. So we rode that momentum all the way to the downside, and of course we had multiple entries along the line. Oh, thank you very much, Sharif. And Kilo, Yonki, thank you very much. So we are all good, right? So we were able to join those momentum to the downside, and for those of us who capitalized on this opportunity, well done and kudos to you. So yesterday's trading session, Thursday's trading session, we had a new trading setup after considering the character of price action in this particular area, especially during the Asian session. Now, we saw that price action was back into the 2,325 zone. Do you know how important this 2,325 zone is? Now, for those of you who saw my weekend video on the XAUUSD, you will definitely know how that is. Let me see if I still have it highlighted on the higher time frame, so we can all have a better perspective into what things are looking like from an holistic perspective. Okay, great, I still have it. Now, this is the structure we identified at the beginning of the week, if you remember. So this is what we had. We had a bullish momentum all the way from October of last year, and of course I did mention here in my video that we have a $2,325 zone which has been consistent since the beginning of this month of May. Now, since the beginning of this month, price has never ever broken down the $2,325 area. The first time it came close to the area, we saw buy pressure resume from that particular area, and of course, despite the strong bearish momentum during the previous week, we saw what happened. As soon as price tested the $2,325 area, we saw buy pressure resume again from that particular structure. And what this simply tells us is that buyers are strong around this area, making it difficult for sellers to break through. Now, yesterday, look at what happened again. Price action came into the $2,325 area, and as soon as price action tested the zone, we saw buy pressure resume from that particular area. And for me, this is a clear sign that sellers are still finding it difficult and that buyers are still very, very strong around that area. So as a result of this observation, I shared with us a new development yesterday. For those of you who saw my commentary on both my TradingView and Telegram platform, we had a new trading setup, and look at what we had here. So I did mention, after connecting the series of lower highs here, giving us this beautiful descending trend line, and considering this this engulfing bullish candle after price tested the 2,325 area, we were hoping that a breakout retest of that descending trend line would be all we need to capitalize on buying opportunity. And look at what we did here. We had our $2,336 level, which beautifully shares a confluence with that descending trend line, and of course we were able to join that uptrend move. And I joined the initial one. I updated us. I told us to secure profits, secure the position, moving our stop losses to break even, and of course price dropped back again, taking us out at break even. And when price dropped below that level, informed us that we should be preparing for another re-entry, and of course we did, and price climbed up into the zone. And since then, price action has been confined within a range bound structure that is between the $2,348.50 level and of course the $2,341.50 area, to emphasize the prevailing uncertainty in this particular market. And of course, this is not coming to us as a surprise at all, as this consolidation phase reflects market anticipation of the upcoming US core personal consumption expenditure price index, which is expected to provide fresh directional impetus to this particular market. And of course, when market is anticipating such event, we see key players in the market step aside, waiting for the data to come in before making any directional bets. And so there is low liquidity in the market right now. There is indecision going on. Market is rallying or oscillating within a precise range, waiting for this event to happen before it strikes with a particular momentum. Now the question now is, where is price likely going to go? Is it going to continue the uptrend to the upside, or are we going to be seeing a situation where this range bound structure will be broken to the downside to incite a sell-off? Now, before we go into the details here, let's quickly look at the major drivers that is going to be influencing the sentiment in the gold market. And of course, I have like 4 highlights here which I would like to share with us all. One that tops the list here is the softer US dollar and lower US Treasury bond yields. Now, for those of you who have been with me for a while, we know how the US Treasury bond yield is directly proportional in value to the US dollar. Now, if the US Treasury bond yield is doing well, it is expected that the US dollar will do very well, which will exert selling pressure on the prices of gold. But at this moment, the gold prices is advancing modestly due to the softer US dollar and US Treasury bond yield, which make gold more attractive for investors to put their capital on. And personally, I still think the path of least resistance for gold is still looking bullish, considering central banks continue buying of gold commodity since the beginning of this year. I think I've talked about this countless times during the course of our Forex Morning Mastery session. Now, secondly on the list is the bets on Federal Reserve interest rate cuts. Now, as it is right now, traders are increasingly betting that the Federal Reserve will cut interest rate this year following the recent weak US GDP data, but we still need to wait for this core PCE to give us signs that truly interest rate will be cut. And remember, despite this not too good US economic data in the last couple of weeks, Federal Reserve still remain hawkish in their narrative. They are saying they will be adopting a wait and see approach. They will want to see the market, they want to see data that reveals that inflation is gradually thinning out before they will cut interest rate. And this has kept the hopes of a positive US dollar alive for a while now. But today we are going to be having a final decision. If the core PCE comes in hotter than expected, we are likely going to be seeing the US dollar rise, which could exert some selling pressure on the gold. Now, finally, we have the geopolitical risk and conflicts resulting in geopolitical tensions. And when there is geopolitical turmoil, they appeal for safe haven assets such as gold usually increases, as due to the uncertainty in the market, majority will move their capital from currency asset to non-yielding asset such as the gold. So these are the major 4 parameters here, major 4 drivers that will be influencing the sentiment in the gold market. And if you will ask me personally, I still think that the path of least resistance for gold is still looking to the upside. Now the question is, what path is it going to take? Is it going to retrace first of all before it continue the upward trajectory, or is it just going to start the upward trajectory all the way? Well, we have beautiful structures here to guide our decisions on this chart. Well, if we look at the consolidation phase, you will see that despite the fact that price action is confined within a $7 range bound structure, there is a descending trend line we have here, and in fact I'm looking at an uptrend continuation pattern after considering this impulsive move that brought price to this point. So I'm looking at something that looks like a pennant, depending on where you are looking at it from. It could be a flag pattern, whichever case you are looking at it from. So I'm still looking at the possibilities that price breaking out of this descending trend line here will be a beautiful opportunity to catch that uptrend move. And in fact, if price action goes ahead to break out of the 2,350, we will be adding more buy positions to our existing trade. So now to capture the breakout of the resistant line, I'm looking at a $2,345.50 level, which shares a confluence with that resistant line of that trend continuation pattern that we have right there. So let's see if the market will break out of that structure. If it does, then we want to be part of that uptrend move from that particular area. And of course, I will be giving us more updates on multiple levels to add and maximize the potential of that bullish move. And remember that for this first buy position, we do want to be having a wide range of stop loss. That is, we want to give enough breathing space for price action to move around. So we are looking at between 50 to 60, 65 pips thereabouts, so that we can capture the volatility within that area when it happens. Then if price goes ahead to break down the 2,350, we will be adding more buy positions to our existing trade. Now, in as much as we're looking out for buying opportunities in this market, we cannot ignore the potentials that sellers can also come into this market. Of course, you know how we do it in this community. We do understand that the financial market is an uncertain environment, and for us to be successful, for us to have an edge in this kind of environment, we want to keep our options as open as possible. Now, in as much as we're looking out for buying opportunity, we cannot ignore the potentials that sellers can also come in, especially in an era where we are looking forward to a major US macroeconomic event in the form of the US core PCE, which is considered to be the preferred inflationary gauge for the Federal Reserve. And in this case scenario, what are the chances that sellers can come in, and what are the things we want to look out for here to join a bearish move? Well, personally, I doubt if selling opportunity will come today. But we are not going to be leveraging on personal emotions, but instead we want to be objective and listen to what the market participants are saying through the lens of price action. Now, first thing first here is this descending trend line. Let me extend it out a little further. So we have a descending trend line here, and of course we saw how price action broke out of the descending trend line yesterday. Now, from a technical standpoint, when price breaks out of a key structure like this, we do expect that at some point in time price may come back to retest that descending trend line, which beautifully shares a confluence with that support line at the 2,325. Remember that level I showed you on the higher time frame? That is that level right there, a very, very strong demand zone which has been consistent since the beginning of this month of May. Now, the possibility of a retest of this structure to incite an uptrend continuation for me will negate the idea of even considering selling around this particular area. So for me to consider selling this asset, I would like to see price action take out this demand zone or all the buy positions here. In fact, it has to be taken out for us to start considering selling. And what I want to be looking out for to join a bearish move is for price action to break down both the 2,325 level, which beautifully shares a confluence with that descending trend line. Retest of structure will give us further confirmation that a decline is imminent. So this is the only condition for me on this particular asset that will make me consider selling the XAUUSD. But sometimes we may see situations where significant signal comes into play even before the breakdown of such structure happens, like series of lower highs and lower lows on lower time frame. But if such scenario happens, I will definitely give us updates on both my trading view and Telegram platform. So at this point in time, I maintain a strong bullish bias since price is still trading above the descending trend line, and of course that demand zone we identified on the 4 hours time frame. And of course today, that reminds me, we are going to be running the XAUUSD live monitoring window, which kickstarts 5 to 10 minutes into the New York session. So during the XAUUSD live monitoring window, we all come together to monitor real-time price action on the XAUUSD during the New York session. So you want to be part of that session to see how we navigate this current market dynamics in real time. So at the end of this session, you will be seeing the link to the XAUUSD live window. Click on that link, click on the notify me button so you can get notified as soon as we come on live. So it usually starts about 5 to 10 minutes into the New York session and lasts for about 5 to 7 hours depending on the volume of trading activity for that day. I have a strong feeling that the momentum today is going to be very, very massive and strong, so we want to be on standby to capitalize on this opportunity. So this is my view here on the XAUUSD for today. I hope I made myself very clear. If I didn't, or there is an aspect you want me to further clarify, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we close today's Forex Morning Mastery. And please do not forget to give the video a thumbs up. This is the cheapest and only way you can support this community to grow. The more likes you give the video, the more the algorithm will push the video to a wider audience of traders who may find this content beneficial to them. And thank you very much as you do so. And for those of you who had clicked on the like button, I really appreciate from the bottom of my heart. Thank you for the support to this community. And let's make the likes tally with the number of people on board. There are some of us online who are yet to click on the like button. Please do. It doesn't cost us anything at all. So let's see if there are any questions before we round off on today's Forex Morning Mastery. See you in about 10-15 seconds from now. All right, so in the absence of no questions, I want to assume that we are all on the same page, and it's on this note I think we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really appreciate your support, your feedbacks behind the scenes. You guys are just too wonderful. I do hope you click on the like button as always. Please do. This is the only way you can support this channel to grow. I see you, Kilo Yonki. Good to see you. Peter Eze, you are very much welcome. I'm glad to have you around with us this morning. So today we were able to take on the 3 financial instruments we've been monitoring since the beginning of the week, which includes the USOILSPOT, the GBPUSD, and of course my favorite amongst them all, which is the XAUUSD. And we were able to identify simple trading setup using our basic tools such as the trend line, key levels, and chart patterns to unravel the potential trajectory for price action today. So I do hope you marked out these levels accordingly on your chart. If you have done so, well done and kudos to you. all we need to do right now is exercise patience and allow the structures to mature. And always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, ensure you have a well-defined risk management strategy in place. And for those of you who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here. Trust me, the more time you spend with us in this community, the better you get to understand my analytical approach, which eventually will help you in making your own independent trading decisions. So I look forward to seeing more of you, same time on Monday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to start the new week on a positive note. For those of you who are yet to subscribe, please do right away, as I will be sharing some insight into my plans for next week like I usually do during the course of the weekend. I share a couple of videos giving you an idea of what I will be looking at ahead of the week. So click on the subscribe button, so you click on the notify me button so you can always get notified as soon as I drop new content. So I wish you all the best of luck today, and I wish you a wonderful weekend and happy new month in advance. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.